Hey everybody, this is Sim, your crypto CPA from the Lone Star State here at Akif CPA. And in today's segment, we're going to talk and we're going to deep dive right into it on NFT taxes. From whether you're a beginner, somebody who's trading it for the first time, who's acquiring an NFT for the first time, or somebody who's an artist and who's been doing it for a while, or a company that holds licenses to NFTs and it's on different layers of blockchain and it's getting royalty fees. We're going to cover all aspects of NFT taxes. And remember, we here at Akif CPA, what do? We make crypto tax accounting and easy. Basically, in this loose regulatory framework, we make all this stuff easy for you. So you spend less time stressing and more time enjoying life and making more money, whether it's through NFTs or other crypto. So we just want to go ahead and simplify this. So let's get right into it. And I'm going to tell you today and share my screen and let's talk about this. So NFTs, so typically, first time you acquire an NFT, there's two categories. We're going to talk about this from the individual's perspective. Either you're in a passive category, which is this one right here, where you're just holding it, you're trading it. Maybe you're trading it for, let's say, a year or more, holding on to it for a year or more. Or you're somebody who's active, whether you're involved in the NFT business, whether you're an artist, somebody who's licensing NFTs, somebody who mints NFTs, for a living. So where does this all get reported and what happens? So typically, all of this will get reported on your 1040 at a minimum if you're an individual. And under 1040, if you are getting an airdrop of an NFT, that will go on Schedule 1. If you are somebody who is trading NFTs constantly, exchanging NFTs for one NFT for another, and a lot of times when you're on Solana blockchain and different blockchains, now you're getting multiple tokens for trading of one NFT, right? So then all those get reported on Schedule D as your other crypto would, right? And this is all pertaining to the IRS's section or the notice that came out in 2014 classifying all crypto as property, right? But NFTs themselves, when we look at NFTs, these are considered as non-fungible tokens. What does that mean? That means that they're unique. They're one of a kind. You might have multiple issuances of this unique token, but they're still one of a kind, right? So the very first smart contract that came and that was holding the NFTs, and since then it has evolved. You'll notice most of your NFTs, there are always ERC 721 or higher. Okay, 1155 and so on. 1155 is basically a combination of 721 and ERC 20. The 721s and 20s combined together, because you can't trade, let's say you have to send an equal ERC 20 value to get a ERC 721, but with the addition of ERC 1155 smart contracts, again, I'm getting a little technical here, you can have multiple layers of transactions coming into one smart contract. So this covers the holders that are traders. Anytime you exchange, you trade an NFT for another, you're liquidating an NFT for any token, those are all considered taxable events. And you have to report them either on Schedule 1 or Schedule D. Most of you guys will be reporting it on Schedule D, but then if you're getting any income and airdrop and all that, that goes on Schedule 1. And you can see that on line item 8 on Schedule 1. So now let's talk about some of the complications when it comes to NFT taxes. A lot of times, the advanced community that is in DeFi, you are either at OpenSea or you're basically trading and bidding, and you're using, for example, Magic Eden on Solana, and there's so many other types where you're listing your NFT, you're bidding for an NFT. What ends up happening is you're sending your crypto, and if you win, let's say you're placing a bid, you send that crypto, let's say it was 2 Ethereum, right? But if you don't win, it comes back to you as, let's say, 1.8. But in reality, if you send Ethereum and bring it back, this should not be considered as a withdrawal and a deposit. Only the point two, the difference, should be considered as a withdrawal. And that's where the taxable event comes in. But most crypto tax softwares are not equipped to handle that. So don't beat yourself up to it. Sure, if you've been holding on to crypto for a while, it's gonna mess up your chronological order of crypto, your long term versus short term. Maybe you end up utilizing your long term here, as you can see. Let me draw this again. Utilizing your long term here, and then it's coming back to you as short term. So those things are manual adjustments that you have to make. And if you are somebody who's an avid NFT trader, you're running into this all the time. So you need to spend time and get these transactions accurate. Otherwise, you're going to have a lopsided tax figure that's going on. And we see this all the time. And I wish there was a magical fix for these softwares to know. But then, blockchain is a place where there's so much innovation that's going on. So you'll have all these new places that will pop up that are places where you can bid for NFTs. You can list your NFTs, and your NFT is going out, then it's coming back in, and all this constant back and forth is happening. So you need to be aware. For most folks, it would not make too much of a difference, and it's okay to let it go. But for some who have been holding on to their crypto for a while, this will mess up your long-term gain window, and next thing you know, you're paying short-term capital gains, and that's the last thing you want to do. So that is one big thing to avoid. But the rest who are trading NFTs in general, just simple NFTs, you're not going to run into this problem. You're going to be sending one crypto, and then you're going to get an ERC 721 token back into your wallet. Whether you're doing it on OpenSea or somewhere else, just make sure that transaction flow is accurate. And again, there were a lot of places in the past, such as Nifty Gateway and or NFT Gateway, and they were basically, you could accumulate NFTs and you can purchase NFTs using your credit card, and then you're moving your NFTs back into your Ethereum wallets, and it was just messing everything up. There was no cost basis that was showing up. You were basically paying in liquidating your NFTs, and the entire thing was a capital gain, versus only a chunk would have been a capital gain or a loss. So you need to make sure that you're watching out for this. And this is where most advanced NFT traders will run into a problem. But remember this, Schedule 1 and Schedule D. They are your friends when it comes to crypto. 2014-21. And again, NFT, let me tell you, I have it written down. 2023-24, the IRS notice that came out. Let me write this down. 2023 dash where is it? Yeah, 27 actually. 27. You have a look-through provision. What does that mean, ladies and gentlemen? So typically an NFT, you would think that this is an art, right? And the IRS has certain provisions for long-term trading of an art when it's a collectible. Then instead of paying the long-term capital gain rate for NFTs are 0%, 15%, and 20%, but for those that have that long look-through provision where it is deemed a collectible, your capital gain goes up to 28%, ladies and gentlemen. Do not forget this. These are the new IRS rules, and we can't simply omit them. If it's truly an NFT and if it's truly an art, and it is a long-term, it falls into that long-term window, then you have additional capital gains rate that you'll be paying. A lot of us, they'll look through this, but again, don't confuse NFTs with like a restaurant NFTs. You see these all the time where people are buying these restaurant NFTs for a restaurant week, and they can go into different restaurants and eat. Those are not NFTs. It's just a vehicle in purchasing a unique token, a non-fungible token that gives you membership or that one-time use to go to that restaurant, like a gift card. So now let's jump right into the advanced users and advanced traders. And again, I'll be talking about the 1040, but I'll tell you, most advanced folks, they've either gone to a partnership scheme 1065, or they are at an S corporation, an 1120S, or they have a C corporation, the 21% flat tax rate. So let's get right into it. Most of us who think that you're an NFT artist, you'll be getting what's called a royalty income. Anytime your NFT trades through any of the NFT exchanges, you'll see in all the transaction hashes that you'll have this one wallet where you're getting that royalty income. But ladies and gentlemen, do not confuse this for Schedule E. People think that royalty and mineral rights. If you look into Schedule E, it's very clear for artists for this to be reported on Schedule C, not Schedule E. So don't mess this up. So you have the Schedule C provision, and now on your 1040. So all your income, doesn't matter if it's all of that royalty or any primary sales. As soon as you mint an NFT, all those are considered as primary sales. All of those go on Schedule C, and Schedule C is a place where you pay what? An additional 15.3% in self-employment tax. So you need to be careful. Everything at a minimum has to be reported on Schedule C. Sure, if you are somebody who's much more advanced, who has an amazing CPA, who's well versed in crypto and other taxes, they'll tell you to go to S corporation, right, where you're paying yourself a salary, and you can avoid a lot of these taxes. Some of them will go to a partnership when you have multiple people, depending on what the structure is, and you might have a general partner, a GP, or you might have a LP. And then those who are big time players, a lot of them that are looking to going public, a lot of them will have a C corp, and we have serviced a bunch of those, and they will be reporting everything on their C corporation's tax return. So you need to make sure that whether if you are an active NFT participant, that means that you are in the business of NFTs, whether you're producing an art, whether you have licenses, whether you're minting NFTs and you're providing that service, or whether you're some conduit in between that is facilitating and you might have a website, you're considered as an active business. So you need to, at a minimum, report your earnings on Schedule C, on your 1040, or an advanced tax strategy would be S corporation, partnership, or C corp. So this is how you need to treat this. And for those that are regular individuals that are also advanced, most of you will fall into this passive category on the left. And then you will be reporting on Schedule 1, Schedule D. These are the places that you will be reporting. And some of these exchanges now are going to be issuing you the new form, that's the 1099 DA form. But you know very well that most NFT trading happens on the DeFi side. So for that, you're not going to get any of these forms, and you're going to have to report this accurately and in full. I'll be doing more videos and showing you how to simplify this even further. If you have any questions, drop us in the comment section below, like us and subscribe to our channel for a front row seat to all the new streams that come out for crypto related videos. And if there's a topic that you want me to cover in detail, because we do this day in, day out, in all aspects of blockchain, we're not scared of it. We absolutely love this. We're piecing this puzzle together like all day, every day. Yesterday was our big tax day as well, and again, so happy that everything went smoothly, and we'll be more than happy to help you out. If you have any crypto tax amendments, you need to finish those this year. And again, NFTs too. Don't forget, you still have the tax loss harvesting. So please, please, please utilize this as soon as possible before this gets abolished and this gets ruined by the IRS and the Department of Treasury. So let's get this done before the end of the year. Let's have an amazing journey in crypto. If you're doing well, or if a crypto market is down at times, don't worry about it. If you have a hunch for crypto, you know who you are. Now with the stablecoin regulations, this is all going mainstream. So please, please, please don't ruin your tax portfolio with not reporting your crypto taxes. You need to make sure those are also reported well. Thank you so much. This is Saim, your crypto CPA from the Lone Star State here at Akif CPA and also at Chainblock Financial. Thank you.